Morning, everyone. It was the day of the euro overnight. The euro gained against all major currencies as the dollar continued to decline. On the one hand, the shape of an agreement in the U.S. fiscal cliff talks seems to be coming into view. On the other side, Standard & Poor's upgraded Greece. This is something I haven't talked about in a long time. And bond yields in Spain and Italy declined further. So the conditions for risk-on trades in general and a euro rally specifically continue to improve. The euro went from narrow range trading to a full-blown rally, taking out the October and September highs and hitting the late April high of 132.50. We're now over 70 on the relative strength index, which would suggest a pullback is possible. But with euro-dollar taking out one resistance level after another, the rally can probably continue somewhat longer, in my view. As we've seen with the dollar-yen, where the RSI has stayed over 70 for 6 days in a row. It looks like currencies are trending now. Interestingly enough, despite the risk-on environment, commodity currencies did poorly yesterday. The Canadian dollar, Australian dollar, and the New Zealand dollar all eased against the US dollar. But those moves were for domestic reasons, not general fears about growth. I think this highlights one of the new trends in the market. There's less correlation among currencies and asset classes in general as individual circumstances of each country become more important. The Australian dollar fell for the third day after the RBA governor, Mr. Stevens, concern that the general economy may not be able to pick up the slack after mining investment slows. The New Zealand dollar weakened after milk prices fell further, and the Canadian dollar was down on what looked largely like profit-taking after a large gain on Monday. Now, the Australian dollar is the most overvalued currency in the world on several measures. So I think if the support of high interest rates is likely to diminish, then the currency is likely to decline. I'd prefer to be short Australian dollar at this point, especially against the euro, which seems to be trending higher. So while our top trade probably for euro bulls is euro-yen, I think traders who are interested in playing the continued euro rally should look to buy the euro versus the Australian dollar, which seems to be moving lower now. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you good trading.